Hyliion! Man, oh man. It just is not getting better, ladies and gentlemen. Not in the slightest. Welcome back to Strongman Personal Finance. We got to talk about Hyliion. I got a lot of hate for making a video about this company, where I said it was a share-diluting, unprofitable, cash-burning piece of trash. And everybody attacked me. They said, Strongman, what are you talking about? Financials don't matter. It's all about the future, bro. And I got hate. I even went into the forum, the Discord of the Hyliion clowns. And I said, hey, boys, let's chat. Let's have a conversation. And you know what they did? They banned me. Absolutely sick, disgusting, and weak. So let's go ahead and review the most recent press release, the full year financials for Hyliion. And I'm going to remind you again why this company is a stinky, wet fart shark. So here we have this release on February 28th, 2023. That is a whole 6 days ago. I should have got to this earlier. New business highlights. Achieved new Hypertruck ERX commercialization milestone. Okay, they made a milestone. I mean, scratching my nuts in the morning is a milestone. It doesn't mean anything. Obtained a 10-unit order. 10 units. Announced a collaboration with Hyliion Motors to jointly develop a fuel cell truck, so no progress there. Met 2022 revenue guidance. What was the revenue, like $5? And ended 2022 with $422 million of available cash on the balance sheet, with operating expense guidance of $130 to $140 million. So basically, they really didn't highlight anything that indicated profitability, right? That's very interesting. But apparently they got 10 orders of a truck. Man, they're blowing it out of the water. I wonder how much of an unprofitable share diluting trash stock this is. Well, let's look at the most recent earnings. So, in the last 3 months ended December 31st, 2022, look how much revenue they got. They got $1 million of revenue. $1 million of revenue. How long has this company been in business and they have $1 million of revenue? I've seen individuals that make more in freaking revenue. Cost of sales, product sales, and other. This is their cost of goods sold. $1.6 million. Their cost of goods sold is higher than their revenues. I wonder what that means, sir. Oh, they have a negative gross margin. Now, I will give Hyliion some credit. Year over year, they have improved their gross margin, okay? Their gross margin was massively, insanely negative. Like, looks like a negative 1,000% here. Here, it's getting a lot better, okay? Negative 50% it looks like gross margin. That doesn't look that bad, okay? Now, we come down and look at research and development. Now, people say, oh, well, look, their gross margin's getting better. You know, gross profit, that's so amazing. Most of Hyliion's expenses are under operating expenses. Look at research and development. We have an increase of $17 million to $21 million. So they have $1 million of revenues, and they just burned, in 3 months, $21 million of research and development. And they burned just under $10 million of selling, general, and administrative expenses. That's pretty insane, okay? Now, I see another change here. They have interest income of $2.6 million. Why do they have interest income? Do they just have a bunch of treasuries they're investing in on the balance sheet? I don't know, okay? They have a gain on impairment or disposal of assets. So I guess they sold some assets and they made some money, okay? And other expense. So their total net loss was negative $30 million. In 3 months, they lost $30 million. For the full year, they lost $153 million. Do you see why I'm not a big fan of this company? $1 million of revenue, $29 million of net loss. This is what you call a clownish gamble, okay? Let's go look at the balance sheet and see what happened. Cash and cash equivalents have gone down massively. Where did the cash go? I don't know. Well, it looks like some of it went to short-term investments. So their short-term investments are sitting at $200 million. They have total current assets of $324 million. How long can this cash last? Well, you could look at the statement of cash flows, or you can look at their loss from operations. I mean, obviously the statement of cash flows is probably a better indicator because you have to factor in property, plant, equipment too and all that. But it looks like they have a decent amount of balance sheet, but it's depleting, okay? Look at their current assets. It's gone from $386 million to $324 million. They're burning cash. Eventually, they're going to extinguish all of their cash. And when that happens, they're going to have to go into debt and issue a ton or issue a ton of shares, okay? Now, they bought some property, plant, equipment, really insignificant. Operating lease use assets went down. These are, when you have a lease in accounting, you have to put it on your books as an asset and a liability. That went down probably because they made some payments and the lease is closer to ending. Intangible assets went down, probably due to amortization. Other assets went down. And long-term investments went down by $80 million. Now, I suspect that they sold these long-term investments. Maybe they're treasuries and maybe they had to move over to short-term investments. Maybe that's what it was. But the key that you need to focus in on is the total assets of the company over a year have gone down by about $30 million in a year. Assets went down by $130 million. Now, eventually, if this keeps going down, eventually it's going to go to zero unless they make some money or they issue stock or they go into debt and borrow money. I wonder which one they're going to take. I don't know. I guess it depends on the stock price, all right? Now, we compare that to liabilities. Their liabilities have actually gone down too. Overall, they have a pretty strong fortress balance sheet, okay? They still have $446 million of assets, and they only have $23 million of liabilities. So theoretically, they could pay off all their debts in one fell swoop and be perfectly fine. Why haven't they done that? Well, I guess the cost of debt is really low, and they'd rather keep the cash because they're burning cash hand over fist. Now, how did their equity go up? Well, common stock has increased. Additional paid-in capital has gone up. That means stock issuance. And retained earnings has gone down massively. What does that mean? That means they've recorded about $150 million of losses because that's the difference between those two, and they're definitely not paying dividends. And I can tell that because I go back up and, oh, look at that, 153. How did I know that? Man, I'm a freaking genius, okay? So overall, eventually, if this company doesn't reverse itself around, it's going to go ahead and have to massively dilute. And I'm not very impressed with $1 million of revenue in 3 months or $2 million of revenue over a whole year, okay? This company has just been sitting here being a clown stock forever. When are they actually going to start generating meaningful revenue? I haven't seen it. It's going to take a long time to compensate for this net loss. Huge amount of time. They're going to have to generate insane amount of sales just to cover their operating expenses. It's going to take forever. And the whole time they're going to be losing money and burning cash and burning cash. All right. Let's look at cash flows from operations, okay? So we have some add backs, depreciation, amortization. We have an inventory write-down. They had a $5.6 million write-down, so they decreased their value of their inventory. Basically, they probably compared it to the market value. $5.6 million. Why are they writing down their inventory? That's interesting. Share-based compensation, $6.9 million. Okay. Acquired and processed research and development. And we go down and we see that their total net cash spent in operations in 2022 was $116 million. So you notice the trend. They burned $22 million of cash in 2020, $80 million in 2021, and $116 million in 2022. Their cash burn's pretty significant, okay? And on top of that, you got to factor in all the money they're spending on property, plant, and equipment, research and development, and you can ignore this. It's just investments changing hands. But overall, they're burning cash hand over fist. Let's look at financing. So far, they don't have any financing. Why? Because they don't need it yet. But at some point, you're going to see a big number here. You're going to see big number here probably. Definitely not PPP. They took a PPP loan. That's cute. You're going to see a bunch of numbers here one day as they have to dilute because they are burning cash in operations and they are burning cash in investments. That's not that good, okay? That's actually really terrifying. So overall, this company is still a massive wet fart. I don't understand the fascination with this company. It's all about the future, bro. And it's been years and years and years, and they're still not even light years distance from becoming profitable. Absolutely insane. So you clowns, go ahead, you buy the stock. Go ahead and just watch it stay flat or go down for the next year and a half, 2 years, and you enjoy yourselves. Me personally, I'm not touching this hot trash. Talk to you later.